Welcome back to the Crypto Intellect, where we break down the biggest developments shaping the future of digital assets, crypto regulation, and institutional adoption. Today's story is one that every XRP holder, Bitcoin investor, and crypto enthusiast should be paying attention to because the conversation has shifted dramatically. This is no longer just about price action, market cycles, or speculation. The focus has moved toward legislation, and specifically toward the Clarity Act. What makes this moment so important is that the pressure to move this legislation forward is growing by the day. Across Washington, industry leaders, regulators, major crypto companies, and investors are all watching the same clock. The message coming from many corners of the digital asset industry is becoming increasingly clear. Delays are no longer acceptable. The demand for regulatory certainty has reached a level where many believe the United States is approaching a critical decision point. What happens next could influence not only Bitcoin and XRP, but the entire future of blockchain innovation in America. One of the most interesting developments surrounding this story is what happened in the market itself. After public discussions intensified regarding the timeline for the Clarity Act, Bitcoin experienced a significant decline. For many investors, that raised an immediate question. Why would the market weaken at a time when regulatory progress appears to be getting closer? Some viewed the drop as nothing more than normal market volatility. Others looked deeper and began asking whether larger players were quietly positioning themselves before a major shift in the legal landscape. Throughout financial history, significant institutional moves have often happened before the public fully understood what was taking place. That is why so many experienced investors are paying close attention, not just to price charts, but to developments inside Washington. They understand that legislation can sometimes have a larger long-term impact than short-term market movements. The possibility that regulatory clarity could unlock new waves of institutional participation is becoming one of the most closely watched narratives in the crypto market today. At the center of this discussion is a simple but incredibly important problem. The United States still lacks a fully defined framework that clearly separates digital commodities from digital securities. While this may sound technical, it has enormous implications. Banks, pension funds, hedge funds, asset managers, and major financial institutions require clear rules before allocating large amounts of capital into an asset class. Compliance departments cannot operate effectively when legal definitions remain uncertain. This uncertainty has created a situation where trillions of dollars of potential institutional capital remain cautious about entering the market. The Clarity Act seeks to solve that issue by establishing defined categories and assigning regulatory responsibilities. Supporters argue that once those rules are written into law, institutions will finally have the confidence needed to engage with digital assets on a much larger scale. For XRP holders specifically, many believe that increased institutional participation could become one of the most significant catalysts for long-term growth across the broader crypto ecosystem. The urgency surrounding the legislation has intensified because lawmakers and industry leaders recognize that time matters. Every month without a clear framework creates additional uncertainty. Businesses making strategic decisions about blockchain investments cannot wait forever. Developers building new technologies need to know the rules under which they will operate. Investors want transparency. Companies need predictability. This is why so many voices are now emphasizing that delays carry real consequences. The conversation is no longer simply about whether regulation should happen. The debate has evolved into how quickly it can happen. The longer the process stretches out, the greater the risk that innovation and investment begin moving elsewhere. For supporters of the Clarity Act, this has become a race against time. They argue that establishing a legal framework now is far better than spending years debating the issue, while competitors around the world continue advancing their own digital asset industries. Adding even more attention to the issue is the growing involvement of major industry organizations. More than 200 companies and blockchain-focused groups have reportedly united in support of advancing crypto legislation. This level of coordination is unusual and demonstrates how important the matter has become. Companies that compete fiercely in the marketplace are finding common ground on one issue: regulatory clarity. Their argument is straightforward. Innovation thrives when the rules are known. Businesses can plan, invest, hire, and expand when they understand the legal environment. Without that certainty, decision-making becomes more difficult and growth slows. For companies operating within the blockchain sector, the Clarity Act represents an opportunity to finally establish a foundation that allows the industry to mature within the United States, rather than seeking opportunities elsewhere. Another factor driving urgency is the growing recognition that other countries are not standing still. Around the world, governments continue developing frameworks designed to attract blockchain companies, developers, and investment capital. Nations that provide clear rules often gain a competitive advantage because businesses prefer environments where expectations are defined. This international competition has become a major talking point among lawmakers and industry advocates. Many believe that America risks falling behind if it does not move decisively. The concern is not merely theoretical. Talent, capital, and innovation are highly mobile in today's global economy. If entrepreneurs find more favorable conditions elsewhere, they can relocate. If investors discover clearer opportunities abroad, they can deploy capital internationally. The pressure to pass meaningful legislation is therefore tied directly to maintaining leadership in one of the fastest-growing technological sectors of the modern economy. One of the most debated elements within the Clarity Act involves protections for software developers. Supporters argue that developers who create blockchain applications should not automatically be held responsible if others misuse the technology. They compare the situation to building infrastructure. Just as an engineer who designs a highway is not responsible for every action that occurs on that road, blockchain developers should not face liability solely because they created software. Advocates believe these protections are essential for fostering innovation. Without them, developers may hesitate to build new technologies in the United States. Fear of legal uncertainty could discourage entrepreneurship and slow technological progress. This issue has become one of the central discussions surrounding the legislation because it touches directly on how innovation will be treated under future regulatory frameworks. Law enforcement concerns, however, have introduced another layer of complexity. Some officials worry that broad developer protections could create challenges when investigating illicit financial activity involving blockchain networks. Their argument is that regulators and investigators need sufficient tools to combat fraud, money laundering, and other criminal behavior. As a result, negotiations have focused heavily on balancing innovation with accountability. This balancing act has become one of the key factors influencing the legislative timeline. Supporters of the bill insist that both goals can be achieved simultaneously. Critics want stronger assurances that enforcement capabilities will not be weakened. The outcome of these discussions could play a major role in determining how quickly the legislation advances through Congress. For investors watching from the sidelines, these behind-the-scenes negotiations may ultimately prove more important than any daily market fluctuation. What makes this situation particularly fascinating is the level of coordination taking place behind closed doors. Industry representatives, lawmakers, legal experts, former regulators, and advocacy groups have all become involved in discussions designed to move the process forward. Reports indicate that significant efforts are being made to address concerns and find common ground. This is not the type of activity typically seen around legislation that lacks momentum. Instead, it reflects a growing recognition that stakeholders across multiple sectors understand what is at stake. The crypto industry wants clarity. Financial institutions want certainty. Policymakers want accountability. The challenge is finding language that satisfies enough participants to build broad support. While disagreements remain, the continued engagement suggests that negotiations are active rather than stalled. For XRP investors, the significance of regulatory clarity extends beyond general market confidence. XRP has spent years at the center of discussions regarding digital asset classification. As a result, any legislation that provides clearer definitions could have major implications for how the asset is viewed by institutions and market participants. Many XRP supporters have long argued that regulatory uncertainty has held back adoption and investment. A comprehensive framework could potentially remove some of those barriers. While legislation alone does not guarantee price appreciation, supporters believe it could create conditions that allow broader participation in the ecosystem. This is one reason why developments surrounding the Clarity Act continue attracting so much attention within the XRP community. Institutional investors are also watching closely because regulatory clarity often serves as a prerequisite for large-scale capital deployment. Major financial firms operate under strict compliance requirements. Before introducing new products, offering services, or allocating significant resources, they need confidence that the legal environment is stable. The Clarity Act is viewed by many as a potential solution to that challenge. By establishing defined categories and responsibilities, the legislation could reduce uncertainty and provide institutions with a clearer roadmap. This possibility has fueled speculation about what broader participation might mean for the future of digital assets. Whether or not those expectations are realized, there is little doubt that institutional interest remains a major part of the conversation. Another important aspect of this story involves tokenization and the future evolution of financial markets. Industry leaders frequently point to tokenized assets as one of blockchain technology's most transformative applications. Real estate, stocks, bonds, and investment funds could potentially be represented digitally and transferred more efficiently. Supporters argue that these innovations could improve accessibility, reduce costs, and increase market efficiency. However, such developments require regulatory frameworks capable of supporting them. Without legal certainty, many institutions remain hesitant to pursue these opportunities aggressively. The Clarity Act is therefore viewed by many not merely as crypto legislation but as a foundational step toward a broader transformation of financial infrastructure. The discussion also extends to global payments and stablecoin adoption. Blockchain technology offers the possibility of faster, cheaper, and more accessible transfers across borders. Businesses and consumers increasingly recognize the value of systems that operate continuously rather than being limited by traditional banking hours. Yet once again, regulation plays a crucial role. Companies need to understand the rules before committing substantial resources. Investors need confidence in the legal framework. Regulators need mechanisms for oversight. The push for clarity is therefore connected directly to practical applications that could affect millions of users worldwide. This is one reason why the urgency surrounding the legislation continues to grow. When we step back and look at the bigger picture, a clear pattern emerges. Industry coalitions are pushing for action. Lawmakers are debating solutions. Financial institutions are monitoring developments. Developers are waiting for certainty. Investors are watching timelines closely. All of these groups are focused on the same central issue, establishing a framework that defines how digital assets fit within the American financial system. The convergence of these interests is what makes this moment unique. Rarely do so many influential stakeholders align around a single legislative objective. That alignment is one reason many observers believe the pressure to move forward has never been stronger. At the same time, uncertainty remains. Legislative processes are often unpredictable. Compromises must be negotiated. Concerns must be addressed. Timelines can change. While supporters emphasize urgency, there is no guarantee that every obstacle will be resolved quickly. That reality explains why investors continue monitoring developments so closely. The stakes are high because the outcome could influence the trajectory of the digital asset industry for years to come. Whether the legislation advances rapidly or faces additional delays, the decisions made in the coming months are likely to have lasting consequences for innovation, investment, and adoption across the crypto sector. As we wrap up today's analysis, one thing is becoming increasingly difficult to ignore. The call for regulatory clarity is no longer coming from a small group of crypto advocates. It is being echoed by companies, investors, policymakers, developers, and institutions that recognize the importance of establishing clear rules. The message is simple. The industry wants certainty, and many believe the time for waiting has passed. The Clarity Act has become a focal point in that effort, and the pressure to act continues building. Whether you hold XRP, Bitcoin, or any other digital asset, the developments surrounding this legislation could shape the next chapter of the market. Stay informed, stay focused on the bigger picture, and remember that some of the most important changes in financial history begin long before they are fully reflected in prices. Thanks for watching the Crypto Intellect, and I'll see you in the next one.